Okay, that's an RL for you. Mayuresh Joshi is also joining in. Mayuresh, lots of key earnings are coming in late yesterday. Before I talk about SBI, let's just start with Cipla. Pharma stocks in focus as well. 8% cut on Cipla, one of the few pharma earnings to really disappoint the street. What's the sense that you're getting on Cipla? And as we talk about Cipla, talk to us about Sun Pharma as well, because Taro numbers came out. Bit of a quiet performance for them, but Sun is expected to get a boost because Taro is going to give them dividend income of about 2,730 crores. So that could augur well for the counter.
So morning Dipanshu. First of all, I think I'm very happy Dipali to you and the entire team at Btvi and all the viewers as well. In terms of how numbers have panned out for Cipla in particular, it was disappointing to say the least. So the top line degrowth that we've probably seen, I think was something that was not expected, because they were expected to grow at a very decent clip, and they've not done that in terms of how the revenues have panned out. And even on the EBITDA margin front, the margins have been very, very soft. And though I think one really expects a few key launches to probably aid them, along with the respiratory products that can come through over the next few quarters, I think one really needs to recalibrate their earnings in terms of an FY20 perspective. So yes, I think numbers have been disappointing. I think what you've also probably seen in terms of valuation, I think they're very close to their fair valuation band. So I think the softness in the counter might continue and the stock might consolidate at lower levels. For Sun, again in particular, Dipanshu, I think the kind of numbers that Taro has given out, and again I think the expectations in terms of a few key launches from Sun, I think there is revenue potential that can come through these key launches as and when they happen over the next 1 to 2 quarters. Again, I think something in terms of what can come through in terms of higher dividend income, I think one does pencil that in, but a large element in terms of key core earnings growth is largely going to be dependent on A, the kind of approvals for these generics, and B, how they're able to probably protect their margins, because pricing pressure still seems to be evident in few of the normal generic drugs, and R&D expenses are still supposed to be a tad bit on the higher side. So yes, I think anybody holding Sun can definitely hold Sun, but again Cipla, I think the weak performance will probably reflect on the stock.
There are no major losses either that you're picking up on in trade. Mayuresh, what did you make of SBI's earnings? Are you buying the stock? Because it really is at a cusp of a turnaround. Most brokerages believe that those 3 quarters of losses are finally behind them. They've turned profitable, and the liquidity squeeze in the industry will benefit SBI in a big way. Along with SBI, you can even tell us what you think about other PSU banks, if there's anything out there that you're acquiring or holding on your portfolio.
So I think it was a reasonable set of numbers, Samina, that State Bank posted, specifically in terms of how the slippages number has come through at 10,800 odd crores. And though I think the slippages from the corporate watch list was around 2,500 odd crores, the management did allude to the fact that the remainder of the slippages which came in from the SME and the agri loans, I think that was more or less to do with the loan waivers that a lot of states had announced. So I think a large element in terms of this corporate stress actually worsening off, and the watch list, which stands at around 20,500 odd crores, is hardly 1% of their overall advances. Again, I think the question mark that was probably raised in terms of their power assets exposure, I think around 32,000 crores has already been marked as NPAs, and what you've probably seen in terms of the other exposure specifically to the private side, I think it's rated A and above. So the provisioning done on NCLT cases, what they've written back in terms of 6,000 crores on one account, the expectation that they probably are expected to recover further, I think that is something that has propped up the street. The I think element which ideally the street would want to see in a far more consistent fashion is the advances growth, and whether that probably starts coming through in a far more granular fashion. So I think the CASA ratio probably is one of the best within the PSU universe. Their capital adequacy at 10.1, specifically in terms of their Tier 1 ratio, I think is extremely strong as well. So that gives enough amount of ammunition in terms of balance sheet expansion. GNPAs, NPAs are expected to taper off, credit costs are expected to come out, and so is the annualized slippage rate, which will give a boost to earnings, specifically ROAs for the bank. So yes, I think this is one bank that I've liked in the past. Any investor probably holding on should hold on. Within the other universe that you're speaking about, Samir, I think a whole host of PSU banks have reported good set of numbers with strong recoveries and upgrades, stability probably seen in asset quality. But I think this trend should repeat in Q3. Unless we get definitive trends that they are on the mend, I think it's very difficult to justify. And though valuations are on their side, I think one quarter which probably goes abrupt again probably ruins the entire recovery story for these banks. So I'm far more comfortable sticking with the large cap PSU banks at this point of time.
All right, 1280 in a higher time frame possible. Mayuresh, give us your sense of the next year. How do you expect markets to pan out at Angel Broking? What are your top bets for somewhat 2075?
So again, we are a little bit overweight on financials, Dipanshu, at this point of time, because our entire thesis in terms of the liquidity squeeze that the markets are witnessing, specifically at the broader end, a few of the large private sector banks are going to benefit from this entire scenario. Having said that, I think banks like RBL Bank, where our entire belief is that the CASA accretion is going to be very, very strong and granular over the next few quarters, capital adequacy remaining strong, and expectations of the bank maintaining NIMs above 4%. I think they are very, very strong indicators in terms of the core performance. In the similar breadth, I think ICICI Bank, HDFC Bank also become our basket of financials that we probably like. HDFC Bank far more stable in terms of reported numbers, asset quality, and expectations of their premium valuations justifying the kind of ROEs and ROEs that they probably report. ICICI Bank, again, in terms of what they have probably reported in the quarter gone by, the large expectations in terms of them around getting around the asset quality issues, at the same time I think credit cost dwindling downwards, gives us the confidence that the kind of growth that the bank has exhibited in retail advances should sustain going forward, which gives it a very, very healthy liability franchise, and it's reasonably capitalized as well. So I think both these parameters should work in their favor. Within the mid-cap universe, again, I think Samina was talking about Bata. This is one stock that we've liked in the past. We've continued liking that, and we like that at the current levels as well. Very good set of numbers in my opinion. I think one should not compare this sequentially on a quarter-on-quarter basis. But if one really looks at the potential that the stock can deliver over the next few quarters, in terms of opening up of new stores in 400 odd cities, tier 2, tier 3 towns is where their expansion plans are. Ladies footwear expected to go to 40% from 30%, which is a high value margin business. I think it's going to be value accretive because they already possess a very, very strong balance sheet. And again, out of the broader universe, I think consumption auto names is something we'll continue to like. So TTK Prestige, expectations of their cooker division expected to do well. LPG connections, the Ujjwala scheme is something that will be a key driver for the stock. Within the auto universe, you spoke about Ashok Leyland Maruti. I think they are very, very value accretive buys on any significant decline, because the kind of volume growth that can come through in terms of whatever softness we've probably seen specifically for a counter like Maruti should come back to mean input cost inflation obviously should be tided over in the next few months and quarters, and that gives us the confidence that the earnings will bounce back very, very sharply, and valuations have become very, very attractive after the sharp fall that we've probably witnessed.
Right. Ashok Leyland is the one that Ashish is betting on. Gentlemen, thanks so much for coming in today. Ashish, Jay, Mayuresh and Vikas, wish you all a happy and prosperous new year ahead. Happy Diwali to you and your families. We'll of course keep connecting with you in somewhat 2075 too.